Welcome to Your Financial Advocate with Greg DuPont from DuPont Wealth Solutions. As a practicing advisor and attorney, Greg teaches pre-retirees how to reduce debt and taxes and save with less risk so they have more spendable income and plan their way to a better life. Join us for this journey where Greg draws on years of experience and guest experts to help listeners achieve more spendable income for retirement.
Hello and welcome to Your Financial Advocate with Greg DuPont of DuPont Wealth Solutions. Greg, how are you?
I am doing wonderful, Eric. How are you doing?
I'm doing fantastic. We were both counting our blessings before the podcast about neither one of us having COVID. COVID has not interrupted our businesses or our life at this point, besides just the general interruption that everybody's facing, but staying healthy and knocking on wood.
We've almost made it through 2020, and we're ready to move forward into 2021 and leave COVID in our dust as soon as we can.
As soon as possible. Absolutely. All right, so looking forward to 2021, I know that this is the time of year that a lot of people talk about New Year's resolutions and so on and so forth. I prefer some goal setting to resolutions just because, I don't know, it just makes more sense to me because I can resolve to stop doing something or to do something, but without steps, I just don't do it. I'll just be honest.
Yeah. People tend to set these goals that are unreachable. Right?
Mm-hmm.
They make the gap too big. They say I'm going to save an extra $15,000 this year, and well, last year they didn't save diddly squat. Mm-hmm. And when that gap there is just too big, the mind says, "Hey, come on, you're full of it." Yeah. and then you never do it, right?
That's right. I don't know how many times my brain has said, "Right, you sure you're gonna start exercising?" Did you notice there's potato chips in the pantry? Just go over there. Come on.
That's right. They're awfully tasty, and they're calling your name.
Exactly. Let's eat those while we think about what exercises we're gonna do.
Well, and it is the first year, so maybe you're actually going to take action as you eat those potato chips. You might write down what you're going to be doing in terms of exercise. I'm going to get up and go to the refrigerator, and then I'm going to sit back down. So there's at least 20 steps between those two things. So you might be able to.
Yeah, in my house, from where I sit down and watch TV, there's 5 steps up to the kitchen.
Well, there you go.
I'm doing stairs.
Burn those calories. Yeah.
Yes. Oh, man. You know me so well. All right. So
it's human nature.
Yeah. What should I do different, Greg? Come on. Teach me. What should I be doing different?
Well, let's kind of talk in the general goal setting, right? Goals, as you mentioned, they kind of are there to set a direction, right? It is not to actually achieve those goals. Is what you're getting as you go toward those goals. If I look back into 2020 and all the business goals that we had set, well, some of them we hit, some we didn't, but they did help set that course for the future. And as we do look through, kind of got through that season of gratitude, and now we're into the season of renewal and hope, right, going forward, and trying to get our head around where are we going when it comes to someone's finances. We got to start somewhere, and the old adage about the journey of 1,000 miles starts with the footsteps, or something like that, right?
Yeah.
Confucius or someone like that, somebody much more wise than I, but I do pride myself in being able to parrot other people's things and completely misquote them. But the idea is that, at some point, we got to start taking some action. Mm-hmm. And if we make that action too drastic, we're not going to be able to follow through. Okay, so when we're talking about getting our mind right for finances in 2021, thinking about what are the things that we can do that have that subtle shift that are going to help us improve our lifetime down the road, and reset that direction. And so you do have to kind of get your mind right, as we talked about in one of the earlier modules about financial planning in general. You've got to start with that vision. Where are you going to be in 5, 10, 15 years, 20 years, retirement, 30 years, right? And then break it down as small as you can. So what are the steps we can take throughout 2021 to get ourselves toward that ultimate vision where we're heading.
Yeah, and I don't want to derail what you're introducing here. Obviously, we're talking about goals, but I'd love to hear your thoughts on this. One thing that I've noticed in this last year, in 2020, I think a lot more people understand the importance of an emergency fund, making sure financially that they have some funds set aside just in case. A lot of people lost jobs temporarily. A lot of people lost jobs for much longer than they thought. A lot of business owners were suffering in different ways. What are your thoughts on that as far as making that a goal for this new year? Is that something that you're speaking to people about?
Yeah, I mean, if you look back at the pandemic, and God willing, we're nearing the worst being over of that, but the lessons of the pandemic, the shock to our then reality, people living paycheck to paycheck, people that have no appreciation for how thin the line is between life and death.
Yeah.
I self-admitted I was a virus denier for the first 3 or 4 months of this thing, because over the prior years we'd seen so many similar stories coming out at the end of the year, and it's easy to get cynical about, oh, here comes another virus, and it's going to go away, and the markets are going to gyrate because of that. And hey, we got some manipulation of the markets, great. But when this one became real, so people now, as we are looking to what is the new normal, we've got the healthcare new normal, but I do believe that we're going to see a financial new normal as well, because events like these always do leave economic changes, both in the broader economy and in the at-home economy. And I think you're spot on there, Eric, that people are now starting to realize that, man, I got to have accessible cash, and I've got to have more protection against my mortality.
Yeah. So it's got to be part of a larger goal, though, like you said, right? You're still looking 5, 10, 15 years in the future.
Yeah, you got to start somewhere, and as we talked about in our 401k program, our Back to Basics, one of the things that I contend is that financial industrial complex, the 401k world, 403b, et cetera, has skewed people's savings philosophy so that they put money there without taking some of those more conservative and practical steps to save for their family first. Retirement's going to come. It's going to come a long way down the road, and probably even longer for many of the people that are saving now. So you do look at that big picture. When do I want to go there? When do I want to get retired? But as I'm saving for that, how do I do it in a fashion that is going to protect me and my family in the near term as it's growing, as opposed to just setting it aside for that future that, frankly, may never come.
All right, so let's talk about goal setting. How are we doing it? What's the best way?
Well, the problem that people have when they are trying to set financial goals is that many people have never really given themselves the opportunity and the space to get clear about what that future looks like. They're just kind of following the herd. And so when I'm coaching my clients about that, one of the things that I do challenge them to do is, to take a step back and think about what their desired lifestyle is, not only in the retirement but now, and try to seek balance between the two lifestyles. Again, when we are too focused on accumulating for retirement, then we get ourselves into that never-ending cycle of debt that is really between debt and taxes, those are the two things that create the greatest jeopardy for a successful retirement. So start with that picture. Try to balance it out. Try not to get yourself into the cycle of, I want it, I'm going to buy it, I'm going to finance it because I'm going to buy it, and I'm going to kind of balance things out by saving for the future. That's not the best way to handle that.
Yeah.
So I'm not a fan of starting the first year saying, okay, these are going to be our budgets, because people do not budget. They don't follow budgets. They don't. It's almost against human nature. You're telling yourself what you can and cannot do. Some people have a money mindset that allows them to do that, and those people, they're great within that sector of their world. But it's been my experience over the years that those are few and far between. Most people are going to spend to their means. So you get that vision first, okay? So in 2021, I look back at 2020, and it's hard to get perspective because of the pandemic, but if we've got ourselves to a point where we have gotten through it and we've not had our income stream impacted by that, one of the curious things that's happened as a result of that is most people have had their discretionary income. If they've been blessed and kept their job, their discretionary income, where it used to go to travel and entertainment and all this stuff, it's now going into household. A lot of people are buying fancy grills and things like that. So if you're in that situation, as you look into 21, now you start thinking, okay, my lifestyle has completely changed. I have used to go out every other night for dinner and what have you. We used to spend X a week on our entertainment that way. Well, last year I've treated myself to A, B, C, D, and E with regard to the house. Now, what do I do next? I've still got this lifestyle altering event that's going to continue most likely for the first 6 months of the year, if not longer. How do I maybe save that money and toward those future goals instead of spending it?
Yeah, absolutely. Something more constructive to spend the money on, which would be great. And your future is definitely a more constructive way to do that, or things that are going to bring you value, right? I mean, so one thing for me personally, my wife has noticed more things I need to repair around the house. Yay me, right? But the nice thing is that I took the dollars, like you're saying. We used to go to the movies almost every week. Tuesday here is $5 Tuesday. So it wasn't like we had a huge budget to go out and do this, but $5 a ticket. But you're still talking $50 a month, right, in movies. And of course, there's really no new movies coming out. So that was one thing we saved on. We'd go out to eat at a restaurant a couple times a month. Didn't do that. So again, it all adds up, and 100%. We were able to redirect that to a different place, and we were able to save some, which is a beautiful thing. And of course, the couple trips that we did have planned for this year, we didn't do. So that all went into savings as well. So it's a good thing.
So let's say you're in a situation where you do wish to start making some changes, and you have lived the traditional American lifestyle. We're blessed with our economy, our status, that credit is free for people, and we are able to buy these things. And so now, okay, you found the new religion. You're going to start in 2021, and you're going to get out of debt. There are all kinds of programs out there to do that, and do it mindfully, which some are good, some are bad. One thing that, in my experience as a consumer-oriented attorney earlier on, is, I never recommended that people go to debt counseling services because they are traps for many of them. But there are ways to strategically pay off that debt to improve not only being out of debt, but your financial future. So, for example, some of the plans that we have put together for our clients, eliminate, tens to hundreds of thousands of dollars of debt in a fashion that allows them to accumulate along the way, so that they find themselves in a position where, as opposed to just being debt-free at that instant, because they paid everything off, that they are now in a position where they are literally debt-free for life going forward. They have a usable cash reserve that they are able to access, so they never have to pay compound interest to a bank or financial institution again going forward.
Nice.
So, if we're looking to make those changes in 21 and get debt free, there is a specific tool that we have that we can help them move that direction and do it typically fairly quickly and in a fashion, again, that ends up saving them lots of money.
Greg, how do people get access to that tool? Is that something they can just get from your website, or do they need to contact you?
So we actually have a website out there that's dedicated to that process. It's at www.debtfree4life.com. Again, that's www.debtfree4life.com. And when they're in there, this is no obligation, it's a complimentary service, but when they're in there, they are going to be asked to provide an advisor code. So all they need to do is add my advisor code, which is 257321. Again, that's 257321. And what that website will do for them as they're trying to get their minds set for 21, is going to show them what is the effective interest cost that they are making on their payments. And the whole marketing industry has focused people on APR, right? Annual percentage rates. Well, that's that. Although it's a real number, it's really bogus in my opinion, because it's not the real cost that you're paying on your payment for interest.
Yeah.
When you're paying that mortgage payment, and you've got a $1,500 a month principal and interest payment, but $1,400 of it's going to interest. But they're telling you got a 3% APR. Well, the reality is you're paying 95% of each dollar to interest. And when you're thinking about trying to get ahead in your future, can you think of any type of investment that's going to give you a 95% return?
That's so frustrating.
Not for most people. Yeah.
No.
So through the Debt Free for Life program and process, we are mindful of that, and we kind of spin the tables on compound interest. So instead of you paying that compound interest to the bank, you're paying that to yourself, and through that process, again, we've helped people, get rid of hundreds of thousands of dollars in debt, and I mean mortgages, student loans, consumer credit, cars, all those things, and get themselves repositioned for the future, so that for the next phase of your life, you're earning interest on your own dollars, and you're not paying interest to anybody else.
Wow, that is fantastic news. I'm going to be going to the website myself because we all need that help. And I've got a couple things I'd love to see what this system does and tells me. So I appreciate the website and the numbers. Audience, the beauty of podcasting is you can rewind this, right? He gave the number and he gave the website a couple times. But remember, if you're driving, don't rewind it now. Wait till you get home. Rewind it, write this stuff down, and go visit that. Greg, thank you so much for that resource. What else do we need to talk about today when it comes to goal setting?
So that subject, what we just talked about there was setting a goal for yourself to get out of debt, right?
Yep.
And now let's talk about, maybe our goal is to get ourselves a more accessible rainy day fund and build that up. How do we do that? There are many tools that people have at their disposal to save that rainy day fund. In all candor, unfortunately, tying back to that debt conversation, the whole mortgage industry has made people start thinking about their home equity line as their first line of defense, their piggy bank, and all that. And that's been a byproduct of the fact that money in banks is not paying any type of interest.
Yeah.
So people are saying, well, why should I put the money in a bank where I'm getting nothing, and I can pull money out of my house? So some people look at that and say, okay, for my rainy day fund, my goal is I'm going to have a credit line of X to cover that. Okay, great. But when we have an event like we had last year, and economic circumstances cause people to need to tap those monies, well, then you get on that never-ending cycle of interest again.
Mm-hmm. Mm-hmm.
So even though banks aren't paying much more than diddly squat, which I believe is a Latin term,
I'm sure it is. Yeah.
Yeah,
Pretty sure.
That's still a place where you should be putting some money, right? Now, on top of that, again, part of my planning philosophy, part of our pilot process is that, we want to make sure people have money in the right buckets, and we don't want to be too overweight in the retirement-only fund. So my contention is if you don't feel like the banks are giving you enough, well, now let's open ourselves a conservative investment account.
Mm-hmm.
Where we're going to put that money in there, and unfortunately, we're going to have to pay capital gains tax. But it's better than not having capital gains, right?
Very true. Yeah, absolutely.
And a lot of people kind of have the mindset wrong about capital gains. That if I take $30,000 out, I got $30,000 of capital gain. No, you got capital gain on whatever the difference is between what you put into that and what you take out.
Mm-hmm.
And so that's still a better bucket for many people than having it in the bank. And then, as we talked about before, another place where some people build cash reserves is through using cash value life insurance, that you have the ability to put money in there, allow that cash value to grow, have the added benefit of death benefits should something unfortunate happen, but then have an accessible cash reserve that you can get at as that rainy day fund.
Mm-hmm. Yeah, absolutely. All right, that is fantastic. What else? What's our next step? I mean, if we're really looking at goal setting here.
So if we are in a spot in our life where the goals are not focused at debt reduction and the goals are not focused at rainy day fund, well, then if you've got those two things checked off of the to-do list, well, then you're now in a position to really be focusing on what is that retirement vision, what do we need to do to get that, and start dialing that in a little bit. So with that, many people, the do-it-yourselfers, they are going to use their tools that they have from their 401k provider to try to get what their benchmark is. And, again, starting with that vision of what you want your future to look like, well, let's take a look at that in terms of what our current lifestyle is. How do we afford our lifestyle now? How do we afford that lifestyle in the future with inflation? And start dialing in how much do we need to save with some precision instead of just mindlessly following the 401k recommendations.
Greg, that's fantastic. Thank you so much for providing that. I encourage every listener that is interested. One of the biggest things is just taking that one step forward. And I would say your one step is giving Greg a call, because working with a professional who can look at this from an outside perspective, removing the emotion, being able to say, hey, here's where you're at. Here's what I believe you need to be doing. Here's some things that you can do that are going to help you in your situation. It really is invaluable to have somebody that is doing this full time take a look and be able to give their honest opinion. So please don't be shy. Reach out. Greg will take the call for sure and start that step with you. Greg, thank you so much for your time today. I appreciate all you give back.
Thank you, Eric. Take care.
You bet. And of course, last thank you goes to you, the listening audience. Thank you for tuning in and listening to Your Financial Advocate with Greg DuPont. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Greg comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. Again, thank you so much for listening today. For everyone at DuPont Wealth Solutions, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to Your Financial Advocate. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of DuPont Wealth Solutions. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.